crypto side has been, outside of AI, the fastest adoption of any technology in all of humanity. It has been following a perfect log trend. And what was staggering is last year, the number of active wallets in crypto grew 42% in a year when the market went down 80%. That's like, oh my God. We're now at 516 million users. By the end of 2030, we'll be well over 1 billion users, maybe 2 billion users.
Real Vision founder and CEO Raoul characterizes the adoption of cryptocurrency as one of the fastest paces of technological assimilation in human history, rivaling only artificial intelligence adoption. The current buzz in the cryptocurrency industry centers on BlackRock's proposed spot Bitcoin exchange-traded fund, a significant development considering BlackRock's status as the world's largest asset manager with nearly $10 trillion in assets under management. Beyond its financial clout, BlackRock holds substantial influence in Washington, potentially beneficial for the industry amid regulatory challenges. However, BlackRock is not the sole traditional finance entity eyeing entry into the crypto arena. According to Powell, numerous firms have completed their due diligence and are poised to enter the space pending regulatory approval, a move that could inject tens of billions of new capital into the cryptocurrency industry. Powell envisions a substantial growth in the number of cryptocurrency investors and market participants, predicting a doubling to 1 billion, or even 2 billion people worldwide within the next 7 years. During a recent appearance on the Julia L. Roche show, Powell engaged in a profound discussion about the convergence of macroeconomics and crypto. He highlighted the deep correlation between macro and crypto cycles, emphasizing how the 4-year crypto cycles align with the global business cycle. As the business cycle fluctuates between expansion, peak, decline, and recovery, the crypto cycle mirrors these stages with bull and bear markets. Powell anticipates that 2024 will exemplify this phenomenon, constituting a powerful combination of macro and crypto dynamics, referred to as crypto summer, likely propelling crypto asset prices to new all-time highs.
Today, we're at the bottom of the business cycle. This is the kind of recessionary era. Businesses are laying off staff. Inflation is starting to fall sharply. The forward-looking markets, technology and crypto, priced in a recession last year. And they've been recovering since because they've been following the forward-looking indicators of financial conditions and other things. Right now, stuff like the Russell 2000 and oil is living in the present day, which is slow economy. So they're at their lows. And everyone's like, what the hell is going on? Why are these tech stocks going up and everything else is going down? It's because they're forward-looking, as it is their job. So I've been very bullish. I saw the liquidity cycle, which is the key driver of all assets. The liquidity cycle is based around this interest rate cycle, which is based around this whole debt refi cycle. Liquidity started bottoming last year in October, November, December, and that gave us the signal to start getting long both crypto and technology. And that's been, phenomenally good. I mean, this year, the Nasdaq's up 45% and crypto is anywhere between 80 and 500% this year. And that's got people scratching their heads. But our forward-looking indicators of the business cycle suggest we're going into what is, right now we're in macro spring. That's when the weather kind of gets warmer every day, but sometimes it's raining and sometimes you've got a frost and other times it's hot and you're like, it's always confusing. That's macro spring. We're about to start moving towards macro summer. What is macro summer? Macro summer is when interest rates are falling, inflation is falling, and growth is picking up. That's the kind of holy grail for macro and for investing. And we should be in macro summer for all of 2024 and into 2025. My forward-looking basis is that the economy picks up, inflation keeps falling. I think it'll overshoot to the downside, which is the opposite of everybody else's narrative of sticky inflation. And I think the markets are already showing you how excited they are about this idea, because we've just gone through a ridiculous rate cycle, kind of an unprecedented rate cycle on the back of the unprecedented inflation. That inflation, I think, was just driven by the pandemic. If you shut down, all demand and shut down all supply and then bring it all back on at the same point, you create chaos. Exactly the same happened after World War II. After World War II, Suddenly everyone came back into the labor force and factories had to retool from making munitions to making cars and washing machines and whatever. And we got a massive inflation then. But then what happened is it worked its way through and we just had strong growth going forward.
Powell asserts that a global economic reset took place in 2008 when major economies realized that crucial factors for GDP growth, demographic and productivity growth, were stagnating or declining. Despite this, debt soared, reaching 100% of GDP for many economies at various points. In response, central banks opted to absorb these debts onto their balance sheets and intermittently print money to sustain fragile economies. Powell contends that this approach led to an irreversible point where continuous liquidity provision became necessary to safeguard economic balance. The former Goldman Sachs executive speculates that the U.S. Federal Reserve's prolonged hawkish stance aims to trigger a significant event, such as a commercial real estate downturn, providing justification to return interest rates to zero and engage in extensive money printing. According to Powell, leaving interest rates high while debt and expenses surge is an inconceivable alternative, making money printing a temporary solution. Here, technology and cryptocurrency play a pivotal role. Powell envisions artificial intelligence and robots contributing to essential demographics, operating predominantly in the digital realm. Cryptocurrencies, in turn, emerge as the commercial nucleus fostering thriving ecosystems. Powell's discussion in the video delves into the swift adoption of cryptocurrencies and anticipates upcoming developments in the coming years.
The crypto side has been, outside of AI, the fastest adoption of any technology in all of humanity. It has been following a perfect log trend. And what was staggering is last year, the number of active wallets in crypto grew 42% in a year when the market went down 80%. That's like, oh my God. We're now at 516 million users. By the end of 2030, we'll be well over 1 billion users, maybe 2 billion users. So it is a very prevalent technology. And it's happening this cycle everywhere, kind of everything everywhere all at once. The banks are using it. They're already trying to settle securities on it. They're using it for payment systems. We're seeing Visa using it for payment systems. We're seeing mega brands like Mercedes-Benz or Starbucks using Web3 NFTs. We're seeing Hermes, LVMH as a broader company adopting this. We are seeing ongoing adoption globally of cryptocurrency as an investment vehicle. We're seeing the institutions investing in it. I've had on my show Texas teachers. They were pioneers in the space. We've had Franklin Templeton, Fidelity. I mean, these are big companies. Now we've got BlackRock. So what is going on here? Here's a nice way of framing all of this. And it makes it easier for people who are kind of crypto cynical or don't really understand it. We have two worlds. We talked about this before. We have the physical world that we live in, your world of North Carolina, or my world of the Cayman Islands. And then we've got the digital communities that we live in. The crypto land and fiat world are these two worlds. We've talked about GDP is slow in fiat world because of aging populations, debt, and lack of productivity. But over in crypto land, the population's growing at 42% a year in a year when the economy went down 80%. You've got productivity improvements as new uses of blockchain technology get introduced every day. And you've just wiped out the debt from the previous cycle. So you have a extremely fast-growing emerging market. And what happens is you're now seeing fiat world participants set up offices in crypto land. Franklin Templeton, Fiat, Franklin Templeton, Fidelity, TRS, they're setting up offices there. So we love this place. We think it's a dynamic economy. We want to build stuff here. Then the ETF comes along. The ETF, people need to think of as a trade deal between fiat world and crypto land. So it's a trade deal to allow capital to flow into this other economy. And as that economy, crypto land, grows fast, a lot of money is going to go down through this pipe of the trade deal, which is the ETFs, and then will flourish within that economy. So we're seeing this giant sucking sound of people seeing this economy. It's much like when China came onto the world stage. Is everybody flooded there? Everyone put their capital there. Everyone built offices there because they could see the big opportunity. Well, this is the fastest growing economy we've ever witnessed. It just happens to be a digital one. It has its own system of currency. its own interest rates and central bank policy. It has a financial system, which is DeFi. It has states like Bitcoin, Ethereum, Solana, whatever it may be. These are states within crypto land, and those have different policies. We have taxation systems within crypto land. We have assets, NFTs, within crypto land. And it's just because they've all been more attractive over time, it's sucking in more and more of fiat world into it. And eventually, I think it basically subsumes fiat world.
In recent updates, blockchain data firm GLN has issued a report examining the potential impact of a spot Bitcoin exchange-traded fund on the cryptocurrency industry. According to the report, upon approval by the U.S. Securities and Exchange Commission, a spot Bitcoin ETF could unleash approximately $70 billion in new capital into the cryptocurrency market. The report outlines that the green light for such an ETF would trigger a surge in demand, confronting the relatively liquid Bitcoin supply, thereby intensifying volatility and sparking substantial upside rallies. GLN's report further projects that the influx of funds, potentially $70.5 billion, would originate from investors in stocks, bonds, and gold, allocating a fraction of their assets to Bitcoin and other cryptocurrencies. The report highlights the impact of prolonged accumulation, revealing that nearly 80% of Bitcoin's available supply is now held in long-term holdings. Short-term and active trader supplies are at multi-year lows, with a growing trend of investors moving their Bitcoin into holding wallets. Consequently, the limited supply would be shared among new investors entering the market after the approval of a Bitcoin ETF. In conclusion, GLN's report suggests that even modest inflows resulting from a spot ETF could significantly influence prices due to the unique supply dynamics. Beyond its symbolic significance, the introduction of the first spot Bitcoin ETF represents a potential and substantial influx of new demand, accentuated by the prevailing long-term holding pattern, thereby further exacerbating Bitcoin scarcity. This development, as noted in the report, has the potential to dramatically alter market dynamics. Share your thoughts on GLN's report and Raoul's macro outlook on the cryptocurrency industry in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.